This is how to take trades using Liquidity. Hey guys, my name is Fabio, and in this video I'm going to be showing you exactly how to take trades using Liquidity, how you can identify liquidity, and how to take trades in combination with supply demand. So this video is going to clear everything up for you, and let's dive straight in. Alright, so we're here on the daily time frame on NZD/USD, and I'm going to help you understand exactly how to take a trade using Liquidity. But before we dive into identifying liquidity itself, we need to understand what the overall market structure is doing so that we understand if we're looking for a long or a short. So what we can see here on our chart was that the market was bullish. We had a low, a higher high, a higher low, a higher high, and then we flipped bearish in towards the downside after this break of structure. So at this point in time, we're looking for a short position. Now, to create our immediate daily bias for the day ahead, what you want to do is look at the fractal structure. And what I understand from the fractal structure is that this is my fractal high and that this is my fractal low. This is my fractal high because it broke structure over here. And if you dive into the 4-hour time frame, it will become more clear, because on the 4-hour time frame, what you can see as well is that the overall market structure is bearish in towards the downside. So we have a break of structure, we have another break of structure, and we have another break of structure. So here on the 4-hour time frame as well, lower low, lower low, lower high, lower high, lower low. So obviously now once again we're expecting to create a new lower high and push down lower to create a new lower low. So with all of the market structure understanding, we can then dive in towards the 1-hour time frame and look for a valid setup. So what I want you to understand that in trading there are several ways to identify liquidity. So the main two forms of liquidity that I'm going to be teaching you in this video are: one, range liquidity, where you have an area of consolidation and above or below the range, that is where liquidity lies. And number two, swing high and swing low liquidity, where we expect there to be liquidity above the swing high or below the swing low. Liquidity, very simply explained, is where we expect in the market to be stop losses placed, and once those stop losses are grabbed, we expect a reversal in the opposite direction. Alright, so we understand that the overall market structure here is bearish on NZD/USD. This is your high, this is your low, and now obviously we're looking to see another push in towards the downside. Now, when it comes to identifying those two forms of liquidity, what we want to look for first of all is the so-called range liquidity. So what we have over here is an area of consolidation, and all you simply want to do is draw out the swing high and then look for a grab of liquidity above that high and then a reversal in the opposite direction. This to me confirmed that liquidity has already been grabbed above these highs and that the market does not necessarily need to return to those highs before dropping down lower. Next, once again, what we have here on our immediate bias, or within our immediate proximity of the trade itself, is that we can identify once again an area of consolidation. So once again, identify the overall swing high of that range, and what you can very clearly see is that the market grabs liquidity above the high, as we can see over here, and then reverses in towards the downside, providing us with a very sustainable break in towards the downside. So at this point in time, the 15-minute time frame for me is bearish. This is my high, this is my low, and once again I'm looking for a potential short position. Now, in order to take a valid short, you need a few confluences. So we always need one, supply and demand. As we can see over here, we have an area of supply. This is a supply zone because this is your buy up for a strong sell down that broke market structure. Number two, you need premium versus discount. As you can see over here, we made a valid retracement into premium. Premium is everything above the 0.5 fib. Number three, we need liquidity. Well, as we can see on the 15-minute time frame, we had an area of consolidation, and as you can see, we grabbed liquidity above the range, and now we're reversing in towards the downside. Now, number four is that we need a valid market structure. Well, obviously here on the daily time frame, as explained, we have valid market structure, and on the 1-hour and the 4-hour and even the 15-minute time frame as well, we also have valid market structure because we are bearish from this high in towards this low. And at this point in time, we've also seen a bearish change of character, with this being your change of character high and this being your change of character low. So we've come in towards this area of supply. We've seen liquidation above the range. We've seen a bearish market structure shift in towards the downside on both the 1-hour and the 15-minute time frame. So now we are happy to look for a potential short. Now, when it comes to that final form of liquidity before taking the actual trade itself, because in order to validate this area of supply here, which caused the break of structure, we need to look for that swing high or that swing low liquidity. So what I like to see over here is that we have equal highs. And as you can see, this high over here is positioned directly below this area of supply. When you have an area of liquidity which lies exactly below an area of supply, you can consider this supply zone as a very high probability area of supply. Furthermore, before forming this supply zone, we grab liquidity above the range, and therefore I consider this a double strong zone. So what I mean with a double strong zone is that it has both grabbed liquidity when forming, and we have liquidity right below the zone, making the zone extremely strong. So in these kind of instances, I'm very happy to then simply just take a short as soon as we enter the supply zone with my stop loss above the high, anticipating on the creation of a new lower low. Furthermore, what I want you to understand as well is that next to the fact that we have supply, a bearish market structure, and liquidity, we also once again here on the 15-minute time frame have premium versus discount. We are currently trading inside premium, and therefore this for me is a high probability short. Now, what you see happening is that the market indeed pushes down lower. If you were to want a higher probability trade, you could have always waited for a simple market structure shift here by taking out this area of demand. As you can see, we get the push down, we get another pullback in towards this buy up for the sell down, which you could classify as an additional area of supply, and on which you could have also placed your entry, your stop loss above the supply zone, and then once again, as always, target at least a 1 to 3 risk to reward. And what you'll see is that the market comes back up in towards that supply zone, pushes down lower, and hits our TP for both trades. So this is exactly how to enter a position utilizing liquidity. If you have any questions, as always, make sure to let me know in the comment section down below, or join the free Discord, link in the description as well. See you there. Thanks for watching and have an amazing day. Thanks, guys.